It is it's 10:25 a.m. on December 15th. I want to make a quick evaluation here and a follow-up on Bitcoin. Then I want to go to gold, and then I want to talk about something that's not part of the pattern, but some stuff that I've heard because I've been running around the internet. So here's the deal with this. We talked about a spike and that the market had a probability to go higher. If you think of it as a spike, the dashed line here, the black dashed line, is where the opening would be on a trade. If I traded at the close, it's all cluttered here because I added the charts that I like, range boxes, and measured moves and extensions of 1.272. You can see them all there. And the argument was, if you're smart money and you make money because that's why you're smart, and so because you make money, then you would buy on this market. I have to put it to you on a daily. We'll come back to the 4-hour chart in a minute, because the market basically did a big move like this and a big move like that. I called it a spike, an impulse move. You can listen to the video. And then the projection is that it may go to double the range of the spike. Now, different people do it differently. They can get in at different times. The issue is that it's such an important reversal that it leaves a big trail where that is your risk. You're kind of late to the trade if you think this is reversal. Remember, to put it in my words, I look for swings and I want to get in at the beginning of a swing. So I'm here if this market does a big move like that, and I can't project the spike, but I appreciate the value of it. And a spike is an appreciation of the dynamics of a market that reverses so substantially. It's a real easy thing to see. And one of the principles, my principles of trading, is you want to see the obvious things that everyone else can see and take advantage of if they knew what they were doing. So this is so obvious, it's likely to work because a lot of people will get it. It's just, yeah, it sold down very abruptly and with lots of energy. Well, that's good. That's when you look for buyers at the support and you get in. So what I did was follow, because this isn't very many days, I followed how you could have scaled in and out. I don't really want to go through the details of that, but a smart trader might get in with a fraction of the contracts and go long, because a smart trader thinks, don't short this thing. For me, I'd say the price actions to when it does this is well, this and this, it's too bullish for me. I know there's a support here, but I know when it does this, the market's probably going to go higher. So, and my entry is here, so I only worry about drawdowns. And this market still might go higher, by the way, but I want to make a couple clarifications for you. The range of a box is 2,000 points, and it's of the box. There are two of them. One has a purple, the other one is yellow to distinguish them, because this is so cluttered in here. And I look at markets with ranges, and that's what this is. So my point to this is that these are big moves. You could go to the videos where I showed you how you can add and subtract contracts, scale in and out. Scale in and out makes you a lot of money here. Now, something happened here, and I started to do the video last night, but I only wanted to talk about one thing, and I had to go to bed, and I just didn't want to putz around with this. But the market, when it goes to a 1.272, that's going to give people, a lot of traders, they're thinking that, wow, this thing's breaking down, it just break lower, I better get my butt out of this thing. And that's exactly the wrong thing to do. If you get in on a 1.272 and on a market that's basically ranging, you don't need these range boxes to see it, but it doesn't hurt. And when these range boxes are created, none of this exists, but it is a breakout area of a support of a support area. It's a breakout of a support area. I'd say the bottom of a range box, and it's slightly likely to be a breakout failure. And when it reverses at the 1.272 with a buying tail, you want to buy it. Now, this thing isn't quite $2,000 when it goes up here, but what it did, it went higher and it corrected the gap. There's a gap here. You can't see it on a smaller time frame. That's why these daily charts are very important. And I react to gaps. So it was a potential reversal because it closed the gap. And remember, there are some other gaps here as well. And I don't know how much gaps that haven't been filled here influence the market when it's over here, because the market's really trading in a range, but it's profitable because if you could get 2 bars on some of these trades, like here, maybe you could get in here because it's a double bottom. Well, that's a 4,000 point range. If you could have gotten in here when the market went lower. We already talked about this, the smaller time frames. And if you got in here, you got another, you had a chance of another couple $1,000 ranges. The point of this is, you aren't going to take every reversal. You aren't every trader. Some people will be more buyers and they'll be more buying in their point of view, and others will be sellers. But the market's trading to a pattern that, in looking at this this chart daily, in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, basically the market's been hanging out here. It's ranging in a narrow range. This is a contracted market, even though this is, I'm going to call it a volatile move higher. It's lower and higher. This is when markets trade like this, you think like the market's going to go like that. But what it's doing is it's just trading in this area. Now, if you had taken a profit on this, you got in at the 1.272, and then last night the market closed the gap. That's when I was going to do the video. I said, now this is, you have an option. If you think it's just a breakout failure, and that the market is back in the range box, and you take the point of view that this is a spike type of trade where the market's going to double the initial impulse, you can stay in it. But on the other hand, you've instead of panicking out of this, because a lot of people will see lower lows and lower highs. It's an ABCD pattern. I'm not drawing it in. It did break lower. It's just running stops. It's just running, and it's kind of making the buyers that got in earlier, I'm sorry, later. These are the buyers. I'm in here, somebody starts getting in here, and you could trade it as a buyer and seller and make money in this market, but you're not shorting it here. You're basically buying, because it's a much better way to trade this market when the market, a much better way. You can see it on the other videos how you could make money on this. But the bottom line to it is, well, there are a couple of bottom lines. If you get in with a small stop, you get in on a buying tail, which on the 1.272. The next day, it didn't move anywhere all day. And if you're not clear, they say trade what you see. If you're not clear that while this looks very weak for many hours, and you're worried, if you're worried about it, that the market, since it made new lows, is going to go a lot lower, you have to stick to the trade, because it's such a weak looking trade. Weak, W-E-A-K, when the market's here, and it doesn't look like it's going to get here, but it does. So there are times when you have to understand the dynamics are, it's still a bullish reversal. It still hasn't closed this gap here. It hasn't made new lows. And it's trading in an area here where there's basically a lot of activity between buyers and sellers, and the activity starts kind of late. It starts, the activity is seen through the bars here. It's different than entering here. It's a much more elegant way to trade what I'm doing here, but because the market gets you in the money, it gets you away from your entry quickly, and that's what makes a lot of this a lot easier. And then it's just a question of managing the market, and you'll have some winning scale techniques. Some win, some are not so good. It depends on how you scale. But the bottom line to this, well, I want to finish the bottom line to this because we're at 9 minutes. When it closes the gap, which you can't see on a 4-hour chart, which the market did, you can eyeball it. It's making lower lows, lower highs. You might have gotten out of this because you panicked out of it. You missed a couple, almost. Well, I'll tell you what, a range box. It's from here to here is more than a range box, so it's more than a $2,000 range, and so you made money here if you didn't panic out and if you got in at the 1.272. And when the market corrected higher to close the gap, which you cannot see on this time frame, what did the market do? You take a retrace. Oh, let's get it. Hold on. Make sure I have it. And you go from the top to the bottom. This thing did this. And it came back to, from here to here, it came back to actually a 50%. Actually, what it did, it came back to the, it must have done it after I started a video. I didn't do it, and it ended up going higher. So it didn't. This gap could have been a time to take a profit here. The gap is at the 382. It's got to get above it. It did get above it, but barely. And then the market, and let me put this on a daily chart. There's your gap. It just filled the gap. And now the market's reversing. Markets can reverse. And if they haven't filled the gap, that's bearish. But the market can move to close the gap, and then it resumes going lower. So you'll have to decide how this goes. But the bottom line is, you can buy a contract, you can manage this thing being long in the market. And I don't think that's something that is easily seen unless you dissect these charts and put in tools and go through the process and see how much money is locked into this. If you get long here and you're pretty good at taking, entries, where the entry should be because you have the techniques, the extensions, when you're in a support area, all that. You can make more money than the average trader realizes in here, and you can do it with trades that can be. This is a daily chart. You can do it with trades that are essentially a day long. You're not scalping it for 15 minutes. You're scalping it, and you're trying to trade the range of the bars. We've talked about this before, looking at markets with a lot of single day bars that have nice reversals because they don't have any real obstructive support or resistance to them. I think that's what I said. I hope you understand what that means. So the bottom line to it is, I would be a little bit concerned about this market if it goes lower. If it goes lower, I could use this extension, the 1.618 of this, or I could draw an extension from here to here if this is the top and it goes lower, and that'll give me a more conservative area and a 1.272 that is probably just below this 1.272. It's becoming less clear to me. Probability is a little bit more muddled. I don't have a sense of clarity with it. I still think that the market has a bullish swing off the bottom, and I would not be surprised if the market does what we were talking about, going higher and testing an area higher than this pivot here. But we have to watch this. It's not clear to me. I'm trying to look at the market accurately, but I want to discern when there is some risk to the market. When I saw the 1.272 here, I knew that it has to get to close the gap first, but then what does it do? Because when the market's here, it's the potential potential 135 pattern. 1, 2, 3, 4. That's a very minor trending type of behavior. When it gets to this area, will there be sellers selling this with a stop above here? So that's the 135 pattern. I think as a buyer and a seller, but I want to manage my trade as whatever I am. Am I buying? Have I bought? And then I try to figure out what the edge is for me. So that's all there is to this. We're almost out of time. I do want to make a point on gold, and I want to just say something here. Let me find gold. Gold. I think that's the one I want. Well, I should have lines on the gold chart. So which one is it on my list here? Let's So what have I done? Oh, gee, let me see. I don't think I'm going to bother with this. I'll do gold. Let me look at silver. I'm not sure what the problem is here, so we'll call this follow up on Bitcoin.